the 8th of January 2025. Okay, so what's up for today? Let's see, right? Today, I want to explore the impact of increased stablecoin mintings on cryptocurrency market, the dynamics of it, okay? So in the rapidly evolving landscape of cryptocurrency, stablecoins have emerged as pivotal players, providing an anchor of stability in otherwise volatile market for cryptocurrency. Now, for those that are not sure what a stablecoin is, it is a cryptocurrency which follows it's a representative of the US dollars in the cryptocurrency market. Okay, that's why it's called stablecoin, because the value is stable. So as digital counterparts to traditional fiat currencies, stablecoins offer the promise of decreased volatility and enhanced liquidity, crucial attributes that attract a broad spectrum of investors from cautious newcomers to seasoned traders. Recently, the crypto community has witnessed a significant surge in the minting of stablecoins, a trend that beckons a closer examination of its implications on the market dynamics and investors' behaviors. This presentation aims to dissect the effects of increased stablecoins minting, exploring how it influences liquidity, impact market sentiments, drives investments, and shapes regulatory landscapes. Now, the focus would be on the top two stablecoins in the market, which is USDT, or on what more is USDC. So those that are not, this is better known as Tether, and then this is created by Circle. That's why it's known as USDC. Okay. A surge in the minting of stablecoins can have several implications for the cryptocurrency market. Number one, increased liquidity. What it means, more stablecoins in the market means more funds are available for trading and investments within the crypto space. This increased liquidity can make it easier for traders to buy or sell other cryptocurrencies without causing significant price changes. Okay. Now, the impact, typically, this can lead to more trading volume across crypto exchange and potentially more stability in cryptocurrency prices, as large trades can be absorbed more easily. Number two, indicators of market sentiment. The minting of stablecoins can be seen as an indicator of market sentiment. If stablecoins are being minted rapidly, now the keyword here is rapidly, it may suggest that investors are converting their fiat money into stablecoins to either hold as a safe asset within the cryptocurrency environment or prepare to buy other cryptocurrencies. This can be interpreted as bullish sentiment if the stablecoins are used to purchase cryptocurrencies during market dips, suggesting confidence in future price increase. Okay. Number three, potential increased investments. With more stablecoins available, the barrier to entering the cryptocurrency market lowers, allowing new and existing investors to inject capital into the market easily. This could lead to increased investments in not just the major cryptocurrencies like Bitcoin, Ethereum, but also in smaller emerging tokens. Okay, so now let's dwell into a graphic view of the relationship between the minting of stablecoins and subsequent movements. Now, the chart analysis indicates a correlation between the minting of stablecoins and subsequent bullish movements in the Bitcoin price. Okay, now this is the chart which I created. What we have here, the gray lines, the gray data here are the data which on this particular date, this is how much that is being minted. For example, over here, okay, we are talking about 1.9, almost 2 billion US dollars was minted on December 7th, and then the 631 and so on. Whereas the blue one here is the USDC. Okay, this is how much USDC has been minted. About this is about 4 billion USDC being minted. So what we can see from here, this is the period where this is December, right? And then we have the November, minting. I haven't included the January minting as yet. There's some, okay? There's some by USDC, but I did not. Just want to show you last year. Last year, how did the minting go about? This is November, right over here. These are the dates, roughly the time where it was minted. Then we have October and September in between here. And then this is August. Then the June here, July and May, and then March and April. But you can see the amounts are not small, yeah. So this is about what? This is 2 billion, almost 2 billion here minted. This is almost a billion here. This is almost a billion here by Tether. Almost a billion. This is almost 2 billion here. And this is way much more than that. This is about 3 billion right over here, just alone, from 9 to 12. And then here is about 3 billion from 14 to 20th, 2 billion here, and so on. So what do we observe right over here? And these are the news that being released, okay? Right at this point where the arrow is pointing, the US government moved 30,000 Bitcoins presumably to sell right over here at the top. And then at this area where price just was moving sideways, there's approval of spot Bitcoin exchange traded funds. Way before that, there were already talks about it being approved, and that was the approval time, the news, okay, where it came out. So what are the observations that we've seen so far? Now, during periods of consolidation or relative price stability, there is noticeable minting activity of stablecoins such as USDT and USDC, right? So you see this is consolidation and price is stable, right? It's moving up, down, all in a very uniform fashion. And during this time, there is noticeable minting. That's why you can see from there is a concentration of minting when where the prices were within this range. If you notice that, that's what I want to point out. Okay, so when we see this, we kind of like say, oh, okay, there's money coming in, prepare for the banana movement up, you know, the bullish movement up. So the influx of stablecoins appear to precede and potentially catalyze upwards price movement in Bitcoin. Okay. So when we have an influx of this, a concentration, and it's preceded by a upwards price movement in Bitcoin. You see that? So there is like minting, and the accumulation here by the big boys before the price move up. Notably, the minting of stablecoins tend to decrease or pause during the actual bullish price movement. If you can see, this is where the retailers are coming in because they've seen something, oh, that's a breakout, they join in for that, suggesting that prior accumulation of stablecoins during minting phase could be a preparatory step by investors anticipating price increases. This is also right over here. You see, approval of spot Bitcoin exchange, minting happened, right? Almost close to 2 billion. And then that's where it started moving. But during the process of movements, you see there are no arrows. Means on those particular dates, right, there wasn't any more minting. It's just like they have dumped the whole money into that movement that caused the price to move up. And right here, right at the center, on the day where it was sideways, right, this was the first push up, more minting happened, and right after that, immediately you can see price started pushing up again, right? So what does this mean? The pattern supports the hypothesis that an increase in stablecoin minting can serve as a precursor to bullish trends in the Bitcoin market, right? Okay, so you can see from that. So of course, if you were to go back in time, you would actually get more of this information, okay? And you can see the relationship further, okay? Now, one of the major ones that I do track is USDT. I'm interested more in USDT because it controls a very, very large position of stablecoins in the cryptocurrency market. Okay. So does this mean that we have seen so much minting over here, this is going to go up further? Then we have to see other things. It just cannot just depend on USDT and USDC, right? What we need is the overall exchange reserve in all the exchange, all the stable coins in all the exchanges. We want to see that relationship, right? Now, the stable coins in reserve exchange has increased tremendously since November 2024. If you can see from here, this is a very, very strong movement just right up here. Okay, we saw that. Now, the stable coin in reserve exchange has since stabilized. You see, reaching a top, breaking the previous top right over here. Now reaching the top. In the previous diagram, we saw minting happening again in early December. That explains this movement right up here, this slow movement right up here. Okay. Now, this is the key point. Should exchange make new highs again, so would Bitcoin and the alts. Okay. But if we get sideways movement, we could actually see cryptocurrency consolidate further. So this is something that we need to be careful, because you see, if you go back to the charts and you mark the dates, right, where it went sideways, all this went sideways, these were actually the times whereby the Bitcoin and all cryptocurrencies were actually moving sideways as well. Okay, so if this particular area move into that part of it, so would the cryptocurrency. So this is something that we need to track and look at, because profit taking can happen. Right now, I still think that it still can go up. You know, cryptocurrency still can go up but for the time being, unless we have fresh minting coming in, then probably we might see Bitcoin going sideways. Okay, so would it take a long time? We need to double check and see. You know, if it goes sideways, it's not a bad thing. So if it's being backed up by the what I showed you some more, there will be continued minting coming in. So that's a good sign. We know that it's going to push up one more time, much further. Okay. So hopefully that explains a bit, and you can understand the timing, you know, how to look into the cryptos, whether we should continue buying, or for the time put, you know, not look into buying anymore, probably start taking out some profits as well. Okay. So we'll check and I'll report accordingly if I do see any updates in the cryptocurrency market. With that, that's the report for today.